management of a partnership firms is LLP and ULLP. I have already discussed is the overview of the partnership firms LLP, and now I will be discuss section 184, 185 and book profit and computation of the total income of the firm, and computation of the total income of partner, and computation of tax liabilities, and we will be check the knowledge, and we will be do the practical questions, and we have already discussed the overview and definitions LLP, what is the reason of a conversions of a firm into LLP, and what is the benefits is the conversion of a firm into LLP, and what is the some features in the discuss already last lectures, and partnership firms is it two types LLP and ULLP. Unlimited liabilities partnership. I have discussed on the difference between LLP and ULP, and now we'll be discuss the start of the residential status of the firm, because we will be final the it is firm is the taxable not taxable on the basis of residential status, because it is a person section section 2 clause 31 we have already discussed in the block 1. Regarding of a residential status, a firm is dependent on the fact whether or not on the control of management of its affair is exercised from within India. I have already discussed the definition of India, and what is the terms and conditions for the residential status. Even if the control of management is exercised from within India, and the firm would be residents in India for all the purpose. For determining residential status of a firm, it is immaterial to ascertain the residential status of a partner. The firm will be taxed as a separate entity. The share of pattern of the income the firm will not be included in the hands of the partner. It will be exempted under section 10 clause 2a. Any salary, any bonus, commissions and remunerations which is due or received by a partner, it will be allowed as a deduction subject to certain restrictions. Where a firm pays interest to any partner, the firm can claim deduction of such interest from its total income. The maximum rate at which interest can be allowed in the 12% per annum, the income of the firm will be taxed at the flat rate is the 30%, and education fees and health education fees it will be 4%. Now, on the basis of limited LLP and ULLP, it is the partnership can be divided into two groups. One group is firms fulfills the condition of section 184, and firms does not fulfill the condition of section 184. If a firm not fulfill the conditions, it will be discussed in the section 185. Now we will be discuss in the details if a firm fulfill the condition under the section 184. Firms fulfill the condition of section 184 as per the income tax 1961. Condition to be fulfilled under section 184 to be assessed as a firm. Your firm will be taxable as assessed as per norms the residential status, and a firm's residential status as per the manager who is manage the firms, and who is the director of the firm, and who is a partners of the firm. It depends his her residential status on the situation in India. if he satisfied last 2 years he stay in 2 years in India and 700, 730 days out of 7 years, it will be complete as per for residential status. And residential status, it will be discussed. I have already in last lectures on the basis of this NRI, ordinary residence and residence. It depends on the terms and conditions which you are satisfied. It decide on the residential status. The firm should be evidenced by an instrument, for instance, regular partnership deed or other document containing terms of the partnership firm. It will be fulfill the first conditions. Individual shares of the partners must be specified in the instrument. Certified copy of the above instrument should accompany the first return of income of a firm. Remunerations payable to partners, allowability of remuneration will be governed by the provision under the section 37 and section 40 clause B and relevant provision of the section 37. Here is the first of all specific condition to be fulfilled under the section 40 clause B. Here is the four conditions. I will be fully detailed discuss on conditions one by one. The firm should be evidence and instruments, for instance, regular partnership deed or other documents containing terms of partnership. Individual shares of the partners must be specified in the instruments. A firm cannot get status of unless the instruments of a partnership specifies the individual shares of the partners in the profits of the partnership. Certified copy of the above instrument should accompany first return of the income of a firm. Certified copy of instrument should be filled along with return of income, change in constitutions of the firm or change in a profit sharing ratio, change in remunerations, interest payable of partners. Remunerations paid or payable to partners, its allowability of remuneration will be governed by the provision section 37 and section 40B is the relevant provision under the section 37. No capital expenses will be allowed, no personal expenses will be allowed. Specific conditions for a fulfill under the section 40 clause B. The condition 1, payment should be made to working partner. It means under the section 40B, define the working partner as one who is actively engaged in the conducting the affairs of the business or professions of the firm of which is a partner. Point 2, consider a person can be working partner in more than one firm. If a person working in the one firm and another firm also, or more than two firms also work, it is sufficient even if he is actively engaged in conducting affairs of the firms on the part-time basis. An individual can be working partner. Let's say a company is a partner in a firm. Company cannot be termed as a working partner when a company is a partner in a firm. Director or shareholder of the company can very well be employee of the firm in which the company is a partner. Salary and remuneration paid by the firm, such an employee would be totally outside the amid the disallowance under the section 40 clause B. Remunerations condition to be fulfilled for the under section 40 clause B. And now his second condition is payment of remunerations should be authorized by partnership deed. Any payment of the salary, bonus, commission, or remunerations by whether name called to a working partner is not allowed as a deduction if the payment is not authorized by partnership deed. Point to consider. Mentioning in the partnership deed that remunerations would be payable would not be sufficient. Here is the partnership deed should contain clear specifications of a remuneration. For example, remunerations may be specified by way of annual fixed payment or specified the percentage in the books of profit, or commission may be specified as the percentage of sales. And condition third, remuneration not should not pertain to period to partnership deed. In such conditions, remuneration paid to working partner will be allowed as a deduction to the firm from the date of such partnership deed, not from any period. For example, just I am giving here an example in the calculation of a period. A firm incorporates the clause relating to payment of remunerations to working partners in its partnership deed with effect 1st April 2020. In these conditions, deduction of remuneration would be available only after 1st August 2020, and this allowance would be attractive for the payment for the month of April, May and June and July. Remuneration should be under the conditions section 40 clause B. And as last condition is the fourth condition. Remuneration should be within prescribed limits and books of profit to be arrived as taking only those items chargeable to income under section 28. Business or profession and allow only permissible deduction. For example, rent from house property, dividend, interest on bank deposit are not chargeable as income from business or profession under section 28. If profit and loss account of a firm contains these above receipts, they have to be excluded while calculating the book's profit. Where is the disallowed under the various provision under the section 28 to 44D will have to be eliminated. Actual payment in the excess of such limits of payments and remunerations to non-working partners will be disallowed as an expense. If a company have a profit, for example, 3 lakh rupees of book profit, higher is rupees 1,50,000 or 90% of the book profit for balance profit 60% of such book profit in case of loss is 1,50,000. While calculating book profit to the remuneration payable of a firm to partners, debit to profit and loss account, the aggregate of such remunerations payable to the net profit in order to arrive the book profit. Applicability of section 48 clause 2 The remuneration payable in the partners under the provision section 40A clause 2, the assessing officer can disallow any expenditure if the feels that such expenditure exceeds or unreasonable having regard to the fair market value of a good service or facility which payment is made. Interest paid payable to partners. Allowability of interest will be governed the provision of section 40 clause B. Specific conditions to be fulfilled under section 40 clause B. Payment of interest should be authorized by partnership deed, and if a head of the department calling, it should not pertain to period to partnership deed rate of interest should not be exceed 12% per annum. Interest payable outside India will not be allowed as deduction unless tax has been deducted therefrom. Section 40 clause A and subclause Roman 1. Amount of interest paid in respect of capital borrowed must for the purpose of business or profession. If firms under section 185 assessment when section 184 not complied where a firm does not comply with the provision of section 184 in the assessment year shall be assessed for the assessment year as a firm. No deduction by way of payment of interest, salary, bonus, commissions, etc. It is income chargeable under the head PGP, such as interest, salary, bonus, commissions, etc. Here, the some point discussed is the interest to partner remunerations to partners in the section 40 clause B, interest to partner remunerations to partners. Interest is allowed working on non-working partners. I have already discussed here. This is on a platform is the on the basis of parameters under section 40B. Remuneration is allowed to working partners only. Non-working, not allowed. Only interest is allowed. Must be authorized by partnership deed. Same here is the partnership deed is must be. Interest must be on after the deed. Same here, interest will be deed after the partnership deed. Maximum rate of interest is the 12% is the simple interest. Maximum interest of the 3 lakh rupees of the book profit on in loss of 1,50,000 or 90% of book profit, whichever is more on the balance of at the rate of 60%. Yes, I have already discussed the parameters. Now I will be discuss here is check your knowledge. Here I will be discuss 7 questions on the theoretical basis.